What's going on? Welcome back to Trending Stock. Today I want to talk to you about SoFi. I want to go over what the hell happened today, some of the data points that you need to take away, and go over everything else you need to know. But first, make sure you guys hit that thumbs up. And with that, let's get right to it. So SoFi did get slammed alongside the greater part of the market, so down 5.72%. Absolute craziness. 14.58 the low, 15.56 the high. There was very little opportunity for anyone to swing trade this, even not just SoFi, but pretty much any stock out there. There is very little upside, with the exception of like a small handful. Even looking at my watch list, you have NEO, you have this stock, which is pretty much a fraudulent company altogether. Then you had Celsius, and I think Celsius definitely was one of the big kind of contenders in the market for volume. But aside from that, SoFi didn't, it just got dragged down. But as far as volume, 54.28 million shares being traded, 44.06 is the average. No official news associated to SoFi, no SEC filings, so it was just at the mercy of the broader market. And in case you are wondering what the hell happened, ultimately this right here, so the Michigan consumer sentiment came in at 64.7, the forecast was 67.8, and that is simply put what really killed the market, because that came in very low, insinuating obviously inflation is coming, and that pretty much is piggybacking off of like the FOMC minutes and then Walmart earnings. So pretty much the word of the week is inflation. So a lot of fear. And actually this was the same data point that came out on February the 7th that killed it. So the market was trying to digest everything at the time, and then this came in just like a whirlwind, and it came in. So you can kind of see right here on the 7th, forecast was 72, came in at 67.8. So absolute another bloodbath. And so yeah, I think the market is was just, it is what it is. I think people in reality are also tired of all this kind of stuff in limbo. I'm personally tired of it. Some days you're optimistic, some days honestly the Feds are even talking about rate hikes, some days you're actually optimistic. It is just a crazy roller coaster. Nobody ever needs to go to Disney. You can just invest in the market. It kind of screws you enough. But aside from that though, shorts did increase 407,000. So not like they were starting to wake up, nothing crazy, but you also do see at the same time some manipulation is stepping up, because cost to borrow average is 0.01. And so that does mean a lot of different brokers, that's the average. So obviously it is fair to assume that multiple brokers are now once again paying people to short SoFi. So I've said this like when I first started covering SoFi, that SoFi is trying to make a name for itself in one of the most oldest sectors, and the big boys in town, so the brick and mortar banks, they're not going to go down easy. They're going to try to manipulate the hell out of SoFi, and one way to do that is to incentivize shorting. So again, that's what's happening behind the scenes. But utilization 13.79. Overall there's $1.97 billion worth of shorts. Quickly moving on, looking at the options, you had 21 million in calls, 9.52 million in puts. 47% of all the options being done today were bearish in nature, and you can kind of see that was kind of the writing on the wall. Put slash call ratio was starting to like edge up a little bit, so ultimately meaning that people were kind of anticipating more downside. But based on this right here of the call options that were purchased going into next week, you see a consensus for it to be roughly around 1650. Optimism has definitely died quite a lot with SoFi. There was, even at the beginning of the week, like Monday, there was good optimism for it to be around 18, so that's slowly going down. Bears are anticipating for it to be sub roughly around 14, but you do see at the same time a pocket for it to be sub 1250. So I'm going to go over the technicals and what that all means, but yeah, not necessarily the best. As far as this, with today being Friday and it closing at 1468, that does mean 7,000 in open interest at the 14 is in the money, and 1,000 at that 1450. All of this right here, huge numbers, all expires worthless. So that is the downside of doing options, and regrettably this is probably why shorts did wake up a little bit as well. But These are all the transactions that did occur on the secondary market above $100,000. So very few institutions were actually buying. So a lot of selling going on here. And so I think it wasn't just SoFi. Like I've stated in the past, I cover quite a few different stocks, different YouTube channels. It's all the same today, just big money, not really, like I think a lot of them are just preparing for what might be coming, mitigating some risk. And so I think they were essentially selling. Not many entities were out there willing to buy the dip. So like I said, it was very difficult to even swing trade this, even if you're the best trader out there. But dark pool transactions, you had one right here for 1.53, just happened roughly 10 minutes ago. Aside from that 1.2 million, but even the dark pool in comparison to the norm is rather quiet. So again, something to kind of keep in mind. With it closing at 1467, it is now trading between this S1 and this S2. 1445 is going to be a strong support. Just watch for that going forward into the next couple trading days, or I guess next week. And then 1492 followed by 1569 is going to be the next strong target / resistance points. But yeah, let me know your viewpoint on all of that. When it comes down to analyst ratings, there was one posted yesterday, no price target, but BTIG, Vincent, who has a 48% success rating, did maintain their hold position. So yeah, as a consensus, 1464 is the average based on all the ratings, and that surprisingly does represent a negative 0.2% downside from here. So let me know your viewpoint on that. One thing I do want to bring up though is this right here. So the hedge fund activity. So you have seen basically right here, hedge funds did reduce their position quite a lot in Q4. So this is why, again, a lot of people like point out 13Fs and what institutions are doing, but what true hedge funds were doing is that they were selling out SoFi from what it looks like. So I kind of came across this. This was very surprising to me, kind of contrary to, like I said, what a lot of people are trying to portray on social media, but it looks like a lot of actual hedge funds did sell. So let me know your viewpoint on that. Obviously you can kind of see some of them right here. So Cathie Wood did sell 25% of their position overall in Q4, but aside from all of that though, on the actual chart, some very key levels to watch for. So with it pulling back, you have this right here, the super trend that is currently at $14.49. If SoFi was to break below that, then this is where you'll have algorithmic trading really working against the SoFi. So I know today was difficult, but it could have been a hell of a lot worse if algos were really working against SoFi. So that's going to be one key point to really watch for. It did break below that 50-day moving average, so that's sitting at 1571. Usually results in like a 30% swing when that does happen, historically speaking, of course. One thing to really watch for as well going into next week is this 100-day moving average, $13.79. So this blue line right here, if it breaks below that, then yeah, pretty much you'll be hitting kind of the midpoint right here. So it might just trade between the 100 and 200-day moving averages for the foreseeable future, but let me know your viewpoint on that. If you want to think positively about what happened today and yesterday, that is going to cause the technicals to reset. So stochastic RSI will not be considered overbought anymore. It will kind of get to the neutral and then potentially oversold status. So that, if you want to think of like glass half full kind of scenarios, optimistic, then yeah, that's one thing to take away. But aside from that, I think all the data points are signaling that there is a little bit more downside coming. And I think, again, if you think that all of this is just a fugazi, wrong information right here, then yeah, you can definitely buy the dip, do what you need to do. But I think multiple different sources are all starting to get and spread a lot of fear associated to inflation starting to go back up. So similar to what happened in kind of bringing it back to mid 2024 range. So let me know your viewpoint. Don't forget to hit that thumbs up. Give yourself a shout out. Did you buy the dip? Did you sell? I would have bought actually a little bit today, but today's been kind of a crazy day for me. A lot of meetings. So unfortunately, I was pretty much MIA from everything. The only thing I did was I sold out some of my position on Celsius. So pretty much out of all the stocks out there, glad I kind of doubled down a lot on Celsius. But yeah, I think in general, the market, I don't know, if you believe in these stocks, then definitely take advantage, buy the dip, do what you need to do. But let me know your general thoughts. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And then one final thing, pop over to my Patreon. I give buy signals on stocks, options, and crypto. Many of them have been absolutely on point and bangers. Definitely worthwhile to pop over there and take a look. With all that, appreciate all of you watching.